Great. Good morning, everyone. My name is Marie Tedesco. I'm the CFO of Beasley Broadcast Group, and I'm very excited to be here. This is the first time I am at the NobleCon, and so it's great to see you all. So Beasley Broadcast Group was founded in 1961 by our founder, George Beasley. We celebrated our 60th anniversary last year, and we are a leading local audio, digital, and Esport company, and I'm going to touch on all those in a little bit. I got quite a few slides here, so I'm going to go through them rather quickly. Looking at our radio broadcasting platform, we have 61 radio stations in 14 large and medium markets. We have over 20 million weekly listeners to our content, and we have over 6,600 audio advertisers. On our digital and esports space, our esports are primarily or all located in Houston, Texas. We have almost 150 million annual streaming sessions with 50 million podcast downloads annually. We have approximately 52 million annual unique users, and that's important because they create our impressions, our sellable impressions. For digital revenue, we grew 65% compared to 2019, our pre-pandemic numbers, and we grew 52% year over year. We have a disciplined and experienced team at Beasley. We have a strong family involvement, including Caroline Beasley, who took over for the late George Beasley. Bruce Beasley is our president, and Brian Beasley is our chief operating officer. Aside from the family, we have a very tenured team. Looking at the middle line here, we have over 80 years of Beasley experience working for the company. We recently added new talent, including Kevin Rich, who we stole from Town Square, and also Chris Ornelas, who is from the NAB. Looking at our investment highlights, we have powerful local brands in large and mid-sized markets, and we are taking a larger share of the local revenue in our markets in comparison to our competition. We've built strong relationships with our advertisers, and we are hyper-focused on growing our digital platform. Our industry is stable, our audience are loyal, and importantly, our management team is committed to enhancing shareholder value. Next is a snapshot of our markets and brands. Our largest markets are Boston, Philadelphia, and Detroit. And in Houston, that's where we house our esports teams. Taking a closer look at our brands, in Philadelphia, WMMR is a #1 radio station, and it's the America's longest running premier rock station with the Preston and Steve show, which has dominated the ratings since 2005. In Boston, WBZ is also a #1 rated radio station, and it's the classic flagship station for the New England Patriots, the Bruins, and the Celtics. And it's also our highest billing radio station in the company. In Detroit, our WRIF is Detroit's leading rock station and also the home of Dave and Chuck. And Dave and Chuck Morning Show is also being syndicated in 3 of our markets. At Beasley, we drive ratings and revenue share. Beasley has the highest average rating shares in PPM markets according to Nielsen, and this is in adults 25-54. And we grew our audience 6% in fourth quarter 21 over 2020. And you can see how our peers compared to that. We take a larger share of both local and total revenue in our markets than our peers, and we are outperforming the industry average. We also outpaced nearly all of our peers in 2021 revenue and SOI. The next slide is a snapshot of our top 5 markets. As I said, Boston is our largest market. Boston represents 25% of the company's total revenue, And if you look at the gray area, the shaded area there, in Boston, we take 43% of all local radio revenue in that market. So for every dollar, we take 43 cents of that dollar. Philadelphia is our second largest market. We take 23% of, Philadelphia represents 23% of our total revenue, and in Philadelphia, we take 35 cents of every dollar spent in radio in that market. Detroit, we represents 11% of our total revenue, and we take 21% of all local dollars in that market for radio. Not the 33% that we try to achieve, but we are also not fully clustered in Detroit. We have 4 FM radio stations, and we do have the opportunity to add another FM station there. Tampa and Charlotte represent 9% and 8% of the company's total revenue, and we take 26% in Tampa of the local revenue and 37% in Charlotte. So looking at the revenue mix for Beasley, rock is our number 1 format, followed by news, talk, and sports, and WBC in Boston is a big reason for that, and then followed by country. Consumer services is our number 1 category, followed by retail, which is coming back, and also entertainment. Entertainment was typically a 3rd or 4th number category for us, but with sports betting coming on board, that has really fueled the entertainment category. Auto, pre-pandemic, auto was our 2nd or 3rd category as well, and we expect that to be coming back towards the end of the year. When you compare auto with 2019, we lost approximately $10 million in that category. And overall, 81% of our dollars are captured locally, leaving national at less than 20%, which is a good thing because national, we don't control national revenue, but we can control local revenue. We have built a strong and long-term relationship with our advertisers, and that's the local, small, and medium businesses. We have over 4,800 local radio advertisers, and we have about 240 local sellers, and that includes our digital sellers as well. And you can see some of our larger advertisers on this slide here. Moving to our industry dynamics. So radio is expected to grow 12% in 2022 and be rather stable thereafter. Also, radio, it represents 75% of consumers' daily time spent with an ad-supported audio. And that compares with Spotify, Sirius, Pandora, and also podcasting. Radio has the highest reach of all media among American consumers, and also 6 out of 10 consumers say that local radio personalities make an impact on them or on our consumers. As I said earlier, digital is a prime focus of ours, and our in-market strategy, in-market meaning the digital that we sell in the markets at the radio stations, that includes website, apps, streaming, podcasting, email, social search, video, and geofencing. Then we have developed the out-of-market strategy, which is the digital agency that we started building in 2019. With the pandemic, that was put on hold, and in 2020, we started developing that agency again. And that is an agency with sellers going after advertisers that are non-radio prone. Looking at the dollars, we have increased our digital revenue from $13 million in 2017 to $33 million in 2021. And also our unique users and our unique page views, which contribute to our impressions, have doubled and tripled since 2019. And that just proves that increased content equals increased visitors equals increased revenue. In 2021, we had 3,300 digital advertisers producing 9,100 campaigns, adding up to $33 million. Here's our digital continued growth strategy. We plan to grow our owned and operated impressions, and we're doing that with video on our websites, with banners, with streaming. We also increase our video impressions because they pay us a higher CPM. We need to increase our programmatic rates and also improve our digital margins. We can do that by reducing our cost of goods. In many cases, our digital revenue comes from third party, and third parties such as Facebook, search, social, Google, and those are rather expensive revenues. There is ways to reduce those expenses, either by scaling up or even going offshore. Moving to Esport. We purchased the Houston Outlaws, an Activision Blizzard team, in fourth quarter of 2019. This is a global esport brand. Now, the interesting thing about the Houston Outlaws and the Overwatch game is that they have been playing the same game since 2017. Finally, the Overwatch is releasing a new game that is going to be released by the end of this year. We are starting to play that game in May of 2022. That will be a game that is for players only, not available to the regular gamers until the end of the year. We also developed organically a Rocket League team in 2021. And Rocket League is one of the most popular games with 90 million players, and that's up from 52 million players in 2019. This is a non-franchise model, meaning we did not buy a Rocket League team. We developed it in-house. So there's not high expenses running that game. So why Esport? We have invested in Esport, and so has many other companies. Comcast and Cox are investors, and of course Beasley. And also pop culture icons are involved in esports, including Snoop Dogg, Michael Jordan, Drake, Post Malone, and Ariana Grande. Esport also, one of the long-term investing reasons in investing in esport is the long-term value of the esport teams. You can see here that esport teams, here the top 5, they have high valuations. Looking at near and long-term growth opportunities, so sports betting, that's one category that we are drawing from right now. Sports betting grew from 6.1 million in 2019 to 15.2 million in 2021. It's the fastest growing advertising category that we have seen. Good news for Beasley, if Massachusetts expects to pass sports betting in 2022, we have the largest sports station in that market, and sports betting will just be a huge revenue opportunity for us. Automotive revenue, I mentioned we lost about 10 million in automotive revenue between 2019 and 2021. Historically, it's a top performing category. We expect that to start coming back by the end of the year as the chip shortage and the inventory shortage are easing up. And then also political revenue. We have a local task force in each market that are ready to capture all local and state political revenues. And we are sitting very, very well we have significant revenue opportunities in Florida, Georgia, Massachusetts, Michigan, Nevada, Pennsylvania, and North Carolina with all their governor and Senate races. So for digital, the growth opportunities here, local businesses are expected to spend $93 billion on digital ads in 2022. The time spent online is increasing, and digital ad revenue is growing overall in all formats, especially in video. Also, streaming revenue in the U.S. increased more than $1.7 billion. We stream in some of our stations. We stream in all of our stations. Some stations we are able to sell the stream. We insert our own commercials. In other stations, in other markets, we simulcast our stream for an opportunity to earn higher ratings with Nielsen. Streaming is also outpacing overall industry growth, and the U.S. digital audio services ad spending is expecting to capture over 40% of total audio spend by 2025. Moving to content, so our audience can find us on several different platforms. We are on air, streaming, mobile, online, smart speakers, social media, and also third-party apps. The content monetization for Esport. So the global revenues in esports are projected to exceed $1.6 billion in 2024. The esport revenue comes from several areas. It's media rights, live events, merchandise, in-game purchases, and sponsorships. You can also see here that the esport opportunities are also attracting traditional sports owners such as Robert Kraft or Jeff Wilpon. Esport flagship or viewership continues to increase as traditional sports popularity declines with the younger consumers. And that's important for us, and that's really the reason why we wanted to get into esport. We wanted that younger generation. We don't have radios in our homes anymore, but we can find our content and our brands on Alexa, mobile apps, or the desktops. But for the younger generation, many of them have never seen a radio, but they certainly know gaming. And those are the audience that we want to bring into our space. So our strategic content objectives is to grow our listenerships and our market share. It's to create custom and compelling content. And the content that we call ours is the spoken content. That's the non-duplicative content. We need to do more videos, keep our first data, and continue our podcast development. At this point, our podcast development or our podcasts are mostly repurposed programming. The sales effort looks like this. We're going to increase our local share to more than 33%. We're going to grow our digital to 20% of our total revenue. That's short term. We expect to get there in 2022. Long term, we are expecting to grow our digital revenue to be 40% of our total revenue. National is shrinking, so we need to drive direct business and we need to develop new business. And that takes us to financials. So the good news is that Beasley has generated solid quarter-over-quarter growth since the beginning of the pandemic. Our local strategy includes white glove service, direct-to-market strategy, and leveraging local relationships and offering agency buying services outside our local markets, meaning that we don't only sell Boston radio in Boston. We can sell Boston radio outside of Boston in other markets. We're hyper-focused on growing our digital platform and our digital revenues. Now, looking at our net revenues, the COVID impact is clear. 2019 continues to be the benchmark to exceed, and our goal is to achieve that in 2023. A few things I'll point out in 2019. 2019 included some non-recurring revenues, and that came from the Super Bowl with the rights that we have with the Patriots, also playoffs from the Bruins and the Celtics. And we were also not able to bring back our events and concert revenues in 2021. Auto revenue was also down approximately $10 million, also contributing to the difference in revenue between the 2 years. We made up a portion of the revenue shortage in adjusted EBITDA. CapEx for 2019 was the highest. It included a Philadelphia build-out. And also in 2020, we completed that project. We also included some corporate build-out. In 2022, we have a scheduled build-out in Boston for our studios there. We expect that our capital expenses in 2022 will be somewhere between $7.5 and $8 million. Our free cash flow will grow as we grow our revenues and our SOI. For the 2021 highlights, I'm just going to review a couple of things. We increased our revenue 17% and digital 52%. We outperformed our markets in local, digital, network, NTR, and total revenue in 2021. Our core radio advertising has significantly improved and is quickly getting back to 2019 levels. And we increased our audience page views by 24% in 2021 and by 100% when comparing to 2019. And station operating income, or SOI, increased 75% year over year. Moving to capital, we successfully completed a $300 bond deal in February of 21. Our net leverage was 5.74 times at the year end, and our cash on hand was $51.4 million. Our leverage target is 4.5 times by the end of 2023. We're focused on reducing our leverage and possibly a digital acquisition that could accelerate our growth and bring meaningful synergies. Lastly, we'll take a quick look at our ESG. First of all, broadcasting has a low environmental impact. We are very focused on diversity within our markets. And 33% of Beasley's board of directors is a woman or minority. Nearly 40% of Beasley's executive team is a woman or minority. And we are also always very active in our communities and our markets, serving our communities as much as we can. And that was my presentation. Does anyone have any questions? Yes?
Yeah. So in terms of your capital allocation moving forward, do you plan to maybe buy back shares or do a dividend besides acquisitions?
Yes, so the question was if we plan to use some of our capital to reduce our debt. We are sitting with a substantial amount of cash, $51 million. COVID taught us that $25 million is what we feel comfortable with having in our cash account. So for the difference, we would look at two things. We'd like to buy back some of our bonds at a discount if available. We did a 5-2 bond deal, so in February of 2023, we're able to go back and bring some of those bonds back. We are also able to buy bonds back on the open market. As far as the acquisition, we would definitely look at a digital acquisition, something that would be accretive to the bottom line, possibly with some technology or white label that could bring substantial synergies to the company and reduce our expenses for the white label we have to do with our third-party revenues. And that could also include some offshore company that offers the same type of services. Yes?
What percentage of the company is held by these family members?
So the numbers for the Beasley family, the economic is 54%, and the voting right is about 94%. Okay, that's it. Thank you very much for listening, and have a wonderful day.